Well, good morning everybody. How is everybody doing? And what do you guys think about the music we got on today? Let me know in the live chat if you guys can hear me okay. Ooh, had a busy day and happy to be here. All right, it's 8:45. Let's get going. But do let me know in the live chat if audio is working okay. Hey everybody, it's Buddy here. Coming at you live from Bali, 8:45 p.m. where I am, 8:45 a.m. Eastern Standard Time. Getting ready to get started here in the market. We've got 45 minutes before the market opens. And I really want to promote you guys to get more involved in the live chat, get your friends to come, and let's make this more of a party atmosphere, getting our friends and family to chat, ask questions in the live chat, because that makes it more fun. And we want to make sure that this is a fun place for people to come and watch, hang out, and chat and ask questions. And the more people that share their ideas, the more we get to make fun of them. No, the more we get to copy or use similar ideas to make money. Speaking of new ideas, we are going to have a special guest star with us this Wednesday, Magnus R. Okay, he'll be attending. That will be the 8:45 to 9:45 normal session. It looks like my mic audio might be a little bit too loud. I'll turn that down a little bit. Hopefully that's okay. You guys let me know in the live chat if that audio is the right level, okay? And Magnus and I have very different trading strategies. He's shorting Tesla while I've been buying Tesla. And so it'll be good to have him on the show and give a different perspective on the market. And he's been making money. I've been making money. But anyway, stay tuned and you'll see him on Wednesday. And he's also here in Bali. So actually, let me turn on another light so you guys can see me better. He's here in Bali as well. And so he'll feel free to ask questions, and we'll talk to him about what it's like to live in Bali, the living expenses, and the pros and cons. There we go. Got that other light going. And without further ado, there we go. Anyway, let's do a quick rundown of the wheel strategy in case we've got new people or people who still don't get it after coming back. But if you've got any questions about the wheel strategy, let me know in the live chat. Haven't seen anybody in the live chat yet, so please say something in the live chat. Let's make sure it's working. And as I've said before, part of the reason I do this is I want to live forever, and I want to support the exposure and the knowledge of this guy, Mr. Aubrey de Grey, who 5 or 6 years ago gave a talk. Oh geez, no, 2005. That's 16 years ago. Gave a talk. Good evening, David Skinner. Gave a talk on about ways that we can cure aging. If we treat aging like a disease and we deal with 7 basic steps or 7 basic processes that cause us to age, then we can at least extend life and accelerate our longevity and potentially get to the point where we extend it so far, so fast that we don't have to worry about aging as a cause of death for most of us. All right? So check out sens.org with that. Also, check out theoptionsoracle.com. They are affiliated with us. We are affiliated with them. If you go to theoptionsoracle.com, you get a 30-day risk-free trial. They do market signals for the wheel strategy, okay? Selling cash-secured puts and selling stock-covered calls. They've been doing it since 2009. They've got a wonderful track record. Check them out. It's only $97 a month if you choose to stay a member. And if you make money in your first month, that 30-day free trial will help you pay ongoing for your future membership, future months, okay? So do check them out. Anyway, let's jump into this. It's 8:49. If you're not familiar with the wheel strategy, you go out and you find a good company that you like the fundamentals, and you turn around and you sell, not buy, you sell a cash secured put. Now when we say sell, what it is you're actually writing it. You're creating the contract that somebody else is buying. So you don't have to go out and buy a contract and then sell a contract. You're literally creating it, and it's not hard. It's 2 clicks of a button on your Tastyworks or similar trading platform, and then boom, it's out there, it's done. Somebody else is on the market, can buy it, and that's it. You don't have to worry about any paperwork or anything like that. It is super simple. And what happens is if it falls below the strike price that you chose, remember this is a company that you chose and a strike price that you chose. If it falls below that, then you're forced to buy shares of a company that you want to buy. Now, again, I said, go out and find a good company. If it doesn't, then there's no assignment. You simply let the contract expire worthless. You keep all of the premium, just like you were selling insurance, okay? And then you turn around and you do it again if it's profitable or makes sense. Or you go out and find another company to do it on. You don't have to do the same company over and over again. It's your choice. Okay? I'm going to skip most of this. I'm going to get right into the software because I think that's kind of an easier way. If you guys, especially if you guys have already seen it before, you don't need to see it again, the whole slideshow. Let's go ahead and take a look at Space. They've jumped up to $31. We probably won't do anything with this because the price is at a completely different trading range now. But it's a good company. So let's take a look at it. And it's one that we've done before. It's the one I actually use in my example of our slideshow. But I just want to show you how easy this is. So here we are. We type in Space. We go to trade. We're on the table mode, not the curve mode. And you come in and you see the bids. The bid on the right hand side. These are the puts. This is the bid. And then you come in here and you find the value. All right. So let's just say for our first demonstration, we're definitely not going to do this at the money. Right. It's currently trading at 31.16. So we consider 31 and 31.5. These are at the money. Okay. If you were to sell this, you could get between $4.25 to $4.50 per share. Now, if you're still new to options, what does that mean? You're not getting $4.50. You're getting $425, okay? Because these are 100 stock contracts. All option contracts in the U.S. are 100 shares per contract. So just imagine that decimal place doesn't exist. You're getting $425, okay? Now, if you do the math and you take 425 and you divide it by 31, That is a 13.7% return in 32 days. That is phenomenal return. So you say, well, Bud, why don't we do that? Why don't we do it right at the 31? Okay, I'll tell you why. If it goes below 31, you're forced to buy. Now, that doesn't mean you've lost money, because you still get the $4.25 up front in premium, okay? And you get to keep that regardless. So your break-even price will be $26.75, okay? But the odds of this expiring below 31 is actually very high. It's about 40%, okay? If, however, we were simply to go farther out of the money, say we go down to $25 a share, this gives us $6 worth of distance. We'd still be picking up $155 per contract. And now look at our probability of profit, POP. We now have a 72% chance, just based off of, by the way, this does not include any fundamentals, it doesn't include any future news, catalysts, anything that the company might be doing in the future. This probability of profit is determined purely by the price action of the stock and the options in the past, okay? It's only looking at technical analysis, okay? So, you'd have a 72% chance instead of a 50 or 40% chance, okay? And you still get $155. Your break even would be $23.45. You can come here and look at this max loss. It's not going to go to zero, right? Don't get scared. But if you imagine this going over a little bit, right? Take that that comma, put it one step to the right. That's basically your break even, $23.45. Okay, that's a lot more of a discount versus what it's trading at today. Now, if you said that you actually like this company, would you rather buy it at 31 or would you rather buy it at $23.45? Okay. Now, also, if you take $23.45, divide it by the 31, you know that you're getting 24% discount. You're getting a discount of 24.3% discount. And what did we say? $1.55 divided by 25, you're getting still 6% in a single month, okay? So I'd much rather, if I was doing this, I would sell the $25 strike at $1.55. I'm still getting a nice fat 6%, and I'm 25% away from its current trading price. So even if it falls 24%, I make money. If it's at 31, as soon as it starts to fall at all, you start losing profit. If it falls more than $4, you lose money. Anyway, so that's the wheel strategy. Okay, that's the first half, actually, of the wheel strategy. Okay, there's two parts to this. First is selling the cash secured put. Then, if you ever do get assigned, you write a stock covered call. So you're selling a call that's secured by the stocks that you got assigned. That's why it's called the wheel. You do step one, then step two. Step one, then step two. Okay? And if it gets exercised, then you're all back to cash, and you turn around and you sell only secured puts. If this stock covered call does not get exercised, you still own the shares, it can appreciate, and you just keep selling more and more calls against it, lowering your cost basis the entire time. Every month you're collecting premium. If this makes sense to you, hit that like button. Don't forget to subscribe. Also, go check out our sponsor, theoptionsoracle.com. They do market signals for these types of trades every single month. We love them. And also, share the channel with your friends. We need more people viewing and chatting in the live chat. We've only got David talking in the live chat, and no one else has said anything today. Now, we're going to jump over. We've got about 35 minutes before the market opens. We're going to jump to my scanner, easyoptionscan.com. This is not a public scanner, but it's what we am using. And we're going to see what's come up on the market today. And I've kept the scan a bit tight, so we're only looking at 1, 2, 3, 4, 5, 6, 7, 8. I'm going to open that up a little bit wider. I'm going to check out Workhorse. Space is there. Riot is there. You can get 8% on Riot while still getting a cost basis distance. That means downside protection of almost 28%. F-Cell we've seen, but we're not interested. Tilray. I don't remember if I have any positions open on Tilray. Give me a second here. All right, bringing this over. Why didn't that work? Tastyworks is moving very slow today. There we go. Sorry, technical difficulties. Give me a second. Alrighty then. Ba-ba-ba-ba-bum. No, we do not have any open positions on Tilray, so we can go ahead and take a look at that. Workhorse, for those not familiar with them, have two major categories. They were in competition for the electric mail truck for the United States Postal Service. That's why they had such a big run-up last year. Okay, and then in December they pushed it back. There was this big run-up. Everybody thought they were going to get it, and of course they gave it to Ford to make a gas-powered truck instead of electric, because yeah, why not? That makes sense to nobody. Anyway, after that the price tanked, and we're seeing a bit of a bounce back. Not sure actually if it deserves the bounce back. The company is still a growth company, losing money every quarter except December 2020. They have $205 million in cash on hand, $204 in debt versus $479 in assets. They're not counting any of the patents. So here, if we look at intangible, they're not counting their patents and they're not counting their brand. I think that's the first time I actually have to add value into a company, because I know they have patents on drones launching from a vehicle or from a truck. They have a patent. So if Amazon or Tesla wants to launch drones from a truck, I don't remember if it's a moving truck or a truck, then they need to get access to that patent. So that has value. Let's take a look at the debt ratio real quick. 204 over 479. You're looking at 42% debt ratio, so they could still go out and raise 30% more. 479 times 0.3, they'd be able to raise $143 million. So we can imagine that they have 348 in cash available, if you think about it that way. Still only puts them at 3/4 of runway. So that's not happy, that's not good. I want to see 8/4 of runway or higher, ideally. So we're not interested in them. Workhorse is dead to us. If you're holding Workhorse, consider exiting. All right, and Tilray is a is a cannabis stock. They are negative. Be careful when you're on Wallmine, when it adds the CAD, that negative sign sometimes floats above it. They did not make money in March. They lost or spent money to the tune of 340 Canadian dollars. Now they have 416 Canadian dollars. That's not looking good if they're still going to spend 340. I hope this was an acquisition in something major, because if you look back here, they're losing more like 80 and 2 and 2. They're not losing 300 every quarter. So maybe we'll have to look into what that is, or just discount it for now. Debt ratio looks pretty good though. They've got $1 billion in assets. A third of that is in intangibles and patents. Let's pretend that we only get half of that. Let's say 627. Then let's just round it down to $1 billion. They're at 62%. Obviously, if you do that, that's $1 billion. Okay, I do like that this is in cannabis. Cannabis is a growth sector that lets me diversify my portfolio a bit. And cannabis should be growing massively until 2025. So we've looked at it before. I'm going to open up my scanner a little bit wider and see if we find any more stocks for us to go look at today. But Tilray's on the table. I've also got a lot of stocks expiring. I don't have to open up anything today, but I know that's what you guys come here for. And so we always want to see if there's something that we can do together with you guys. Yeah. Whoop. All right. Not touching AMC. That's a grenade. Workhorse, Tilray, Riot. Hey, we've got only 4 viewers now. 3 of you guys left. Nobody was joining the live chat today. We got Riot, we got Space. Space is on a roll. They're up to $31 a share, and they've got good positive news after that test flight was successful. And they're now adding on some sort of zero gravity testing that's going to generate some income to them. Marathon is just like Riot. They're in the Bitcoin mining space. BBY, Bed Bath & Beyond, they keep popping up on here. I don't know, remember the last time I looked at them, so let's take a look at them today. We got Kodak on here. Not interested in that. ACB, Aurora Cannabis. By the way, what I'm looking for that you guys might want to know about is I'm looking for stocks that are going to generate over 4% in a month. So I am in a what I call medium conservative category. I'm not touching AMC. I'm not trying to get more than 10% a month. I'm not trying to do weeklies for 5, 6, 7%, okay? I'm not playing with any hand grenades, but I'm also not out there looking for the blue chips with dividends. So if I get assigned shares, then I collect dividends and only getting 1% a month. That's not going to give me the growth that I'm looking for in my portfolio, but that might be the growth or income that you're looking for in your portfolio, especially if you're retired, right? If you're retired and you need to live on that income, maybe you want to take a more super conservative strategy. That's not what I do. That doesn't mean you can't learn from the channel. It's just I'll be looking at completely different stocks than what you're looking at. So Bed Bath & Beyond, we see that they lost a ton of money June 2020. Then they turned profitable again. Then they went negative. Then they turned profitable. So this company is up and down. But if you look at it yearly, they are down in 2019, down in 2020, down in 2021. With a massive, $600 million loss in 2020. They do have a $1.3 billion in cash, so they could do 2 more COVIDs. Not that we want that, but look at that liabilities. If you take the liabilities 5179 over 6456, you get 80%. That's 10% above any level I want to be in. So we're going to skip that and move on. And I just realized I don't have my spreadsheet open with you guys. So let's go ahead and take a look at that. Bring that over here. Okay. So this is the spreadsheet I've been working on. Companies that have a decent return as well as the financials that we want to see. Some of these you can't quite touch. They don't have enough interest, or sorry, not interest, but return on investment. And some of these we don't want to touch because they just don't have the right fundamentals. So like US Steel, nope, not good fundamentals, too much debt, not enough runway. But we did do a play on CLF, Cleveland Cliffs. They are in the iron mining, and they had a bad debt ratio, but their revenue growth was substantial, was massive. And so that's why we took a gamble on them, and that gamble did pay off. We closed that one early, if you guys are following along with that. Veritone, I don't think we ever did a trade on this. But the numbers worked out pretty well. Let's go see if there's anything on Veritone's symbol, VERI. By the way, it's 9:06. We got about 24 minutes before the market opens. If you guys want me to look at any of your stocks, your ideas, your trades, I'm happy to take a look at your setups, and I'm also happy to take a look at the fundamentals of the company for you. You do not have to trade alone. This might be an individual sport, but that doesn't mean you can't team up. Okay? Okay, what's going on? Alright, there's actually saying no options are available for the symbol, but I also got an error message, so let's go check it out. There's options available for the symbol. Looks like Tastyworks is having some issues today. All right, so let's analyze it from here. If we go out 30 days, it's going to be a little bit more. July 16th is the closest we can get. We can get $1.49 at the money at $17.50. It's a little, actually, it's about $1 below the money, but the strikes are wide at $2.50, so that's the closest we're going to get. It's going to be about 8%, right? Yep, 8.5% at the money. So if we do 0.65 at the 15, you get 4.3%, but that's a little bit longer than 30 days. You're looking at about 39. You're looking at 39 days for 4.3%. That's a bit tough to do. I mean, you can do it though. For it. 39. That's a little bit less than what we want to be, but the strikes are so wide you don't have a whole lot of options there. You don't have the options on the options. Alright, so we're going to put that in our notes. Unity, we were looking at that, but premium was too low last time. Let me take a look at them again. That's going to get us 5-ish% out of the money. That's not very good. That's going to be close to 20-ish%. 105 off of 80, that's only 1.3%. That's not good enough. That's going to be 2.6-ish%. Yeah, I don't think we're going to get anything on this again. We get 4% at the 90. That's going to put us only $5 out of the money. Give us a break even of 86.50 versus today's 94.45. Yeah, it's only 8.5% out of the money. That's not enough for me. Got to wait for a big move on Unity before I want to open up a put position on them. But they are downtrending a lot still, or have been over the last year. This month they're just sort of bouncing back a little bit. They're not really trending up. All right, we checked them again. Still nothing there. NIO is out of China. They compete with Tesla, so it's hard for me to be completely objective against them. To me, they're just a Tesla competitor and a small little bug to be crushed. But let's check them out. 7th. We can go to July 9th. Get about 32 days. 276 at the money. By the way, we check at the money because if we know that we're not getting well over 5% at the money, then you're not going to get 5% out of the money. So I don't think we're going to get anything on with this. Maybe we could look for 4% though. What is $1.66 out of 39? That's 4%, and that gives us a break even of 37.34. Currently trading at 41.80. That's only 10%, 10.5% downside protection. But if you're happy to make 4% on an EV company and hold this company long term, then that would be a trade to get you 4%, but you're only going to get 10% discount if it goes south on you. All right, I'm not doing it, but I'm not doing, what do I want to say? Considering. I'll just leave it at that. NIO, $39 strike. You can probably get $1.70 out of that. Again, I'm not recommending that. I'm not doing it. But if you were looking for something that gets close, or if you're somehow super bullish on NIO, I know some of you guys are. This music's kind of hit or miss today. You have to keep changing it. We made a bunch on Micron technology. We got to close that one early last time. Let's see if we can do it again. I think that was one of our margin plays only though. It's not a good trade on cash. We've got earnings coming out June 30th. Let's see what you can get in 18 days just for funsies. Yeah, so I want you guys to see this. Our break even here would actually be 78.77, but because it's such a stable company, your buying power, your margin is 1/6 of that. It ties up 1/6 of that. You're getting so much leverage on that. That's why this trade isn't good ROI, but it is good ROC, return on capital. So normally we get $1.23 out of 80. That would only be 1.5%. But if instead of comparing it to your max loss, okay, which is the better way to do it, 1.23 out of 78.77 gives you a return on risk of 1.56, right? But if you consider it versus your margin, not recommending this, but it's something you can do, right? We're going to say 13.04. Then you're starting to see a 9.4% return. Just know that you're doing that with margin, right? That's why you're getting 6 times higher. What is that? 0.0156 is what it was before. Literally, I was dead on the money. 6 times higher return because you're getting 6 times the margin. So you can turn this into a 9% return versus your buying power, and you get into a very stable company. Tempting. And you're doing it in 18 days. It's a 9% return on capital, not ROI, in 18 days. I'm probably going to put that on. Okay. MU. We're doing the June 25th. What about that strike price? I didn't do the math on that. I just sort of picked that one. Actually, that's a terrible strike price. These widths are very narrow. Just turn that down a bit. Uh, 78.77 versus today's price of 83. Yeah, it only give you 5.5% discount if it ever dropped. We want to get well above that, way out of that. That's going to give us a break even of 76.39 versus 83.41. Still not very good. So that's the risk here. Not much downside protection, not good ROI, but good ROC, return on capital. And can keep considering that one. I think we did NVIDIA the other day. Let's see if our position on that is still going. Maybe we didn't get filled. Maybe we did something else. We got 15 minutes before the bell. Let me know how you guys are doing in the live chat. If you guys are listening while driving, don't chat while driving. Earnings come out June 9th. That's why I'm not touching it. That's a bummer. Okay. Yeah. Okay. Earnings got pushed back on this. I need to update my spreadsheet. Can't touch Zedge. Their earnings are coming out. I don't know anything about the company. I haven't really bothered to look at it. Tesla has earnings in 3 days? No, oh, sorry. I'm looking at the wrong line. 44 days-ish till we get more Tesla earnings. Oh, Lovesac, LOVE. Yeah, their earnings come out too soon. But we can wait for that. I want to set up a conditional formatting, so if it's over 30, date is not just greater than or equal to 30. We can set that up. And that's good enough. Okay. Somehow messed that up. No, I'm on the wrong one. Okay, that's right. Whoa, whoa, whoa. Didn't mean to put that in there. Do 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 do. All right. Neo, you could do. Veritone strikes for too wide. Discover Financial Services. Their debt was high. Why did I give them their 3 if their debt was high? I mean, it's finance. Can't really. Debt is also what their business is. This one should not be a 3. This is a, because I'm giving a 3 because of their earnings. I'm going to downgrade them. Fubo, I think, had a massive run up in price since we last looked at it. $27-ish right now. We looked at them when they were at $20.53. Let's see. Let's just start checking out some of our positions or some of our companies that we're interested in. See if the price has moved. Palantir is now $24 a share. They were at $20 when we looked at them. Peloton, I think they've dropped. PTON. Oh, they bounced back. Now they're up to 106. They did hit a low of 80 after the treadmill ate a baby. Not really that funny, but do 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 do. $19.77. They're up as well. I feel like I should just add a new column here so we can track their price. 1977 since we looked at it last. 106 since we looked at it. $24. $27-ish. So we're finding good companies. They are continue to moving up in price. Would have helped us and has helped us on our put sells. Lets us close early. But also you can use this strategy just to find good companies. Sell the puts and buy the shares if that's what you want to do. Give me a second here, guys. I'm going to create an invite link. You guys can join us for free on the Discord channel. We only do our live shows Mondays and Wednesdays, 8:45. But feel free to join the Discord channel and get help and share trades and ideas 24/7, 7 days a week. 9:21, we got 9 minutes before the market opens. BNGO, haven't looked at them for a bit. They're up $1 in the pre-market. Something's going on. Okay. Let's go check out BNGO. Looking at what a trade one of our chat members in Discord is talking about. Let's look at that. Man, Tastyworks is having some issues. I'm going to close that and reopen that. Give me a second here, guys. And if you're in the live chat, let me know where you're from, and if you are living and trading, if you're able to live off your trading income. That's the question today. Are you living off of your trading income? All right, BNGO. Finally, Tastyworks is working. Let me get that going. July 16th, 39 days on BNGO, currently trading at 772. I don't know if we're going to get much on this. We actually already have a position open, 25 cents currently. That is exactly 5%. Give us a break even of 475 off of 770. The 770 is in the pre-market. So we're probably not going to get any fill on this rate. So actually, that's really good. Downside protection. I did it in that account. Yeah, okay. But I had the $5 put. I sold it for 61. Now it's at 25. Now that this is going to jump up another dollar in the pre, probably going to see that drop to about 10-15 cents. And I've still got 39 days left on it. We opened it up 2 weeks ago, so I'll probably close that early and look at doing a new one. Because I do like the company. I don't mind if I get more shares on that. So that is probably what's going to happen here in about 5 minutes, boys and girls. And if none of that made sense to you, let me know in the live chat. We're here to teach. So all of this should be making sense to you, what I just said. Shooting up $1. We did the 5. I'm going to put one in and see if we just get some random fill. I doubt it. What's the open interest? Got a lot of open interest at the 7. Not much open interest. Less than 1,000, but still 700 at the 6. I'm going to try and do something that you shouldn't do, boys and girls. I'm going to try and snipe one here in the last 4 minutes because it's jumping in the pre-market. Because it was at 687 on Friday. Now it's 775. That's almost a full dollar. And again, I'm not doing this on hand grenades. I'm only doing this on companies that I don't mind earning. So I'm going to go below the last bid option, bid price. Let's do the math real quick. But if I did 90 cents, 0.90 on 7, that's going to be a 13% return. And if it jumps in the this price should reset once the value resets to 774. Maybe I'm going to move down a bit. Build in a little bit more safety. Nah, let's have fun. Anyway, this is not part of the wheel strategy. This is me being silly. But we've got some cash laying on the sidelines for this. All right, we put that through. This is not wheeling, this is sniping, this is very different. Hey, Glenn Martin from Kansas City, how are you? LAZR, I feel like we looked at that one last week. Luminar Technologies. And thank you for asking something in the chat room. I like it much better when you guys are active with me. Oh, they're out of Orlando. That's my hometown. That's my stomping ground. They're on the east side next to the major college that's over here. There's a college right here, and then they're past it, but there's a college over here. Florida State? FSU, I think. Anyway, Luminar Technologies operates as a vehicle sensor and software company for passenger cars. Do they make LiDAR? Yeah, that's why I don't touch them. LiDAR is probably not going to be the go-to for electric vehicles for automated vehicles, for AI-driven vehicles. LiDAR gives ghosts. Okay, anytime you use radar system on a self-driving vehicle, the problem with LiDAR and radar is it gives ghosts and it causes phantom braking, which is why they first stopped using it in Tesla. And then they basically figured out that, I mean, you think about it, when we're driving, we don't use radar, right? We just look at the road and we look at the signs and we drive perfectly fine. So if you get AI and cameras as good as humans can see, then you solve self-driving anyway and you don't need to use radar. The only reason you'd want to use radar is to see in front of other cars what's going on. But you get the problem of having these things, these what they call ghosts or misreadings in the radar, causes the car to phantom brake, which is basically becoming more dangerous. So if they're a LiDAR company, it says they do a bunch of other things, but they're basically a LiDAR company, which is why I personally wouldn't touch them. All right, BNGO, no. We tried to snipe it. It was $1.05. We dropped it to 90. Now it's sitting at 80. I'll still try and snipe them. But it's between 70 and 80 now. And I'll kill my 90. I don't want to get filled on both. If I get filled on 80, yeah, we got some fill on 80. Not ideal, but fun. Actually, we got filled at 85. We put in at 80, and we got filled at 85. Do I feel like waiting for an hour? Yeah, I'm going to try and put in a close, buy to close. Again, this is not wheeling. This is just having fun and sniping. Either we'll make 30 bucks or we'll just let it stay open. Small chump change, but whatever. We like it on a good company. We just sold puts on it. We can let it play out. Anyway, so there's my answer, Glenn. Sorry on the laser and LiDAR companies. If you dive into their financials or their earnings call and you find out that they're making a bunch of money not in LiDAR, then maybe it's worth looking at. There was another one that wasn't in our live chat. It was in our Discord channel. SOFI. SOFI Technologies out of San Francisco. Finance company operates an online platform that provides financial services. It offers student loan refinancing, that's a good sector, private student loans, personal loans, auto loan refinance, home loans, mortgage loans, and investments, as well as insurance products for renters, homeowners, automobiles, and others. Okay, and they've been around since 2011. That's 10 years. That's not bad. I don't typically look at finance companies. I don't really like them. Okay, it's not what I want. Okay, I got two different things showing up for the symbol. I got an ETF and I got a company. That's annoying. And it's not showing me the NASDAQ option in Wallmine. Alright, we'll have to use the outdated Yahoo Finance. I don't like looking at theirs as much as I like looking at Wallmine. Alright, but before we do that then, let's just jump into the setups. If we go 32 days out, we get 10% at the money. That's good. So we come down, $1.11 at 18.50. It's a 6%. And a crazy spread ask, bid-ask spread. We'll change this to mid. We'll use that. $1.22. Say $1.22 at the 18. That's 6.7%. You have a max loss of 17.05. No, that's the mid would be give us a break even of 16.78. Currently trading 20.85. That gives us a downside protection of almost 20%. That's where we want to be. So now let's go see what they are and what they do. They're going to a fintech conference, and they've got no other big news in the summary. 8:34. I've only got 11 more minutes with you guys. If you have any more questions, now would be the time to ask. And I do appreciate you guys for watching, by the way. And I appreciate you even more if you share it with your friends. Invite your friends through text message, invites, Facebook, saying, hey, this is a great channel. And don't forget, Wednesday, in 2 days, we're going to have a guest star on Wednesday, Magnus R. He has been shorting Tesla, some other companies, and he has some really neat ideas. That's why I decided to invite him onto the show, and he's going to join us. And you should check him out because he does things very differently than I do. So we're going to get a completely new perspective on the channel, and that should be a lot of fun. Reliability of the assets is really good. This we're looking at SoFi on the balance sheet. Why am I not seeing more information? Have they not been public for over a year? Yeah, so they went public in... Wait, did they go public in June? They just went public? Let's search for this. Okay, that's very different than what we just read about. That's digital marketing. Hopefully that's a different company. Yeah, it looks like they went public, and that's not really that big of a drop from 20. We've only got 8 more minutes. I'm probably not going to do anything on this company, even if it has a good setup. I want to look into it more. Yeah, we just don't have the time to do it with you guys. By the way, you guys see me do quick analysis and make trades on stuff, but what you don't get to see is the nice, long, 8 hours, boring deep dive, news dive on companies, which does get done sometimes. Doesn't get done every time. But if you feel like, hey, I can just jump in here and do what Buddy does and start trading that way without doing any deep research, well, that's not what Buddy does. Buddy does some deep research, and I like to stick with stocks that I do over and over again, not just finding new stocks. So we like to find a company, add it to our watch list, and then we take our time, we do a bunch of research, we watch some YouTube videos on it, we put it on in the background, we really try and involve ourselves in the company as much as possible, and then we come in and we look at the price action and all this other good stuff, and then make some trades on it if the setup is there. So don't feel like we're just flying by the seat of our pants on here. Hey, thank you, Glenn. Appreciate you watching. Thank you for thanking me for the education. YouTube doesn't pay me a cent for doing this. Do you guys have to watch ads when you guys are watching me? I hope not. I hope there's no advertising going on. The only way I get money from you guys, if you use the tip jars below, it's in the description. You can pay with PayPal or Bitcoin. Some of you have been doing that. I think somebody's doing that monthly. It's small, but it adds. I appreciate it more than anything. I don't need your guys' money. I do get enough from trading, but that money is going to help us improve the channel, improve the education, and then eventually I want to keep giving money. I actually have been, but I want to keep giving money to sens.org. If you guys don't want to give me money, that's fine. Give it to sens.org. I want to cure aging and live forever. So I'm trying to help you guys get rich, and I'm trying to get richer in the process so that we make sure that we take care of I want to make sure that I'm rich enough that when aging is cured, that I can afford it. I can be one of the first people to afford it, because I don't think this body is going to live to be 100. I'm 38 now, got indigestion and other problems. I don't think this body's going to make it all the way there. So, want to give myself the best chance. Yeah, Glenn, you and I in the same boat. What was I doing? I'm getting distracted talking about other stuff. But do check out theoptionsoracle.com. If you don't want to do all the research and you want somebody else to do all this research for you, what you guys are watching is a very quick clip of what I do every morning when the market opens, usually. You're not seeing the deep dive of the research of the companies that go into it. And if you don't want to do all that work yourself, especially if you've got a full-time job, do check out theoptionsoracle.com. And also check out Bali. Consider living someplace cheaper. If you're in the US, if you're in Europe, you can live cheaper in Vietnam, Thailand, Colombia, Bali, maybe Spain, Portugal. All these places are really good places to live that are more affordable. And the more money you save gives you more money to invest, let your assets grow quicker, get richer quicker. And trust me, I really like living in Bali. I like it better than living in the US. The only thing in the US I really miss at this point, we were talking about this with friends. They were always talking about in Bali, what do you miss back home? And everyone always has some food items that they miss, some cheeses if you're from Europe that they miss. But the big thing that I miss anymore, because I find a lot of the foods, except New York pizza. I haven't found a good New York pizza here. There is actually a New York pizza restaurant that I still need to go try. But the things I miss in the US are the national park systems. I miss being able to just take my RV or truck and go camping in the parks for free. Especially if you go to national park or you go to Bureau of Land Management, you can get some fantastic, spectacular views right next to rivers, right on cliffs or on mountains with beautiful views. You can do hiking in the morning all day, roast some hot dogs or what have you, some burgers. It's just good living. And if I was living in the U.S., that's what I would do. I would just grab an RV, go up into the mountains. I would get away from the cities. I would just trade, because you can use this option. The reason I teach this, by the way, guys, I feel like I should probably mention this somewhere else. The reason I teach this strategy is it's a low time strategy, right? Yes, I do put in the time and the effort for these like deep dives on these companies that I'm interested in. But once you get past that hurdle and you find yourself 5, 6, 7 companies that you really like, you can keep wheeling those over and over again. You could literally get yourself down to the point where you're only putting in an hour a week on this strategy, making very good returns. Now I'm trying to accelerate that, because I'm here to teach you guys. I'm here to promote the Options Oracle. I'm trying to push that to the maximum as I can, and I want to get even better at trading and do other trading strategies. But if I was more in a retirement mindset, or if I was, working full-time, I would use the wheel. I would still use the wheel. I recommend this to all my friends and family. But then I would just downgrade my time commitment. I would stick to a few tight companies. I would do a deep dive on a company once, and then I would trade that company over and over again and just let it work. And you literally, I strongly feel that you can get down to an hour a week using this strategy if that was your goal. If that was your goal and you wanted to do it, you could get down to an hour a week using the wheel strategy. Yeah, so we've got about 71 things in our watch list. I've got it sorted by rating. This doesn't mean this rating, by the way, this rating does not take into account what I call the setup, the ROI that you're going to get on it. These are just companies that we've looked into. It was sorted by rating. These are companies that we've looked into because they popped up on our scanner or were volatile or were somehow mentioned as a possible wheel trade. And then we go out and we base this rating off of their criteria over here on the right. So what are they currently trading at? What is their revenue growth? You see here that CLF was very high in their debt, but their revenue growth was through the roof. So that we can basically overlook that debt. They're also a super positive financial company. They have so much cash and so much revenue that we're not worried about them going out of business, so this debt was not an issue for us. So that's why they got a 3, possibly could even be a 4. And these are very subjective ratings right now. Eventually I might come up with a more objective system. See, I love it when there's someone in the chat room that keeps this and I'm bouncing off of you guys. I know what you guys want to see, what you guys need to know. It's a lot easier for me rather than just constantly making it up and talking by myself in a room. All right, I'm going to wrap this up. It's 9:45. Last plug. Go check out the Options Oracle because it's a 30-day free trial. They do the research for you, okay? They go out, they find the trades, they put it all together in a nice package. You get the newsletter in your email once a month. I've used them for over a year. That's why I'm happy and confident in recommending them to you guys. That's theoptionsoracle.com. Try it for a month. If you make over $100, that pays for your next month membership. It's a great way to get started, and it's a great way to add additional positions that you might not have considered. All right, guys, 9:45. I'm going to sign off. Thank you guys so much for watching. Do check out the Discord chat room as well. And then last thing, one more thing. Come join us on Wednesday. Let's give a warm welcome to guest Magnus R. as he talks to us about his strategy, what it's like living in Bali, and we disagree. We disagree on a few trades and a few companies. So it'll be fun to have him on. Let's welcome him on Wednesday morning. You guys, signing out. Have a great time.